Let's talk about taxes. One of the biggest myths exists today is that the government can solve its financial problems by raising taxes, such as better funding for the schools, access to better healthcare, and maybe even free college. Well, it turns out the government can't raise taxes at all. It can only raise tax rates. Taxes are what happens when the tax rate that the government imposes interacts with people's behavior. This is perhaps the most interesting picture in all of economics. It's interesting precisely because it's so boring. What you're seeing here are federal tax receipts. This is all tax revenue from all sources combined: payroll taxes, income taxes, estate taxes, tariffs, federal taxes, all sources combined, as a fraction of GDP. What you see is, from 1950 up to the present, this has remained relatively stable at about 17%. That is, over time, if you think of the economy as a pie, the government has collected a constant 17% slice of this economic pie. Now, let's superimpose on top of this, for example, the top marginal income tax rate. Back in the 1950s, the top marginal income tax rate was north of 90%. It dropped in the 1960s, reached an all-time low during the Reagan years, goes back up during Bush the first, comes back down, goes back up again. This is the top marginal income tax rate. When you talk about taxing the rich, this is the rate that applies to the rich. But notice what happens here. In years in which we taxed the rich at a very high rate, the government collected 17% of the economy as tax revenue. In years in which we lowered the tax rate on the rich, the government still collected 17% of the economy as tax revenue. The same is true of, for example, the capital gains rate. When capital gains taxes were particularly high, the government collected 17% of the economy as tax revenue. When capital gains taxes were particularly low, the government collected 17% of the economy as tax revenue. The same is true of the average effective corporate tax rate. When corporations paid higher fractions of their profits to the federal government collected 17% of the economy as tax revenue. When tax rates on corporations were lower, the government still collected the same 17% of the economy as tax revenue. It didn't matter whether we taxed the rich or capital gains or corporations. It didn't matter whether we taxed them a high amount or we taxed them a low amount. Regardless of what the government has done, historically, it has consistently collected the same 17% of the economy as tax revenue. Now, you might say, all right, but we're looking at tax revenue as a fraction of GDP. Tell me what's happening to tax revenue. Let's look at what happens to tax revenue as tax rates change. What you see here is the top marginal income tax rate. This is data from 1940 to 2015. Across the bottom, as we move to the right, we're taxing the rich at a higher rate. As we move to the left, we're taxing the rich at a lower rate. Up and down, we're measuring tax revenue per person, 1 year later. This is total federal tax revenue on a per capita basis, 1 year after the tax rate goes into effect, and this is all adjusted for inflation. The story we hear when we hear things like, well, we need more tax revenue so we need to tax the rich more. Implicit in that statement is as you increase the tax rate on the rich, we will collect more tax revenue. But if we actually look at the data, what we see is a different picture. The actual data looks like this. On average, as we have increased the tax rate on the rich, 1 year later, the federal government has actually collected, on average, less tax revenue. There are exceptions to this, but there's also a very clear trend that the tax revenue moves in the opposite direction that we think it should. This is not just true of the top marginal income tax rate. We also see it if we look at the capital gains tax rate. Now, the relationship here is not as tight, but it's disturbingly in the same direction. On average, as the government has increased the capital gains tax rate, 1 year later, it has collected less tax revenue than it did before. We see the same phenomenon with the corporate profits tax. We see the same thing with the estate tax. In fact, of all the federal taxes, I'm only aware of 2 which, historically, as the government has increased these tax rates, its tax revenue has actually gone up. Those 2 taxes are Social Security and Medicare. The disturbing part of this is these are the taxes that fall most heavily on the poor and the middle class. Not the rich. Now, you know a little bit about the history of taxes. I hope you enjoyed this episode. Comment below what you think of this. Thanks for watching.